Hello everyone, it is nice to be here today or tonight or 1 a.m. I don't know what time it is. Okay, so today we're going to talk about Amazon, and be sure you're listening because I think this can make all of us a lot of money. And that's the name of the game, making money, right? Okay, so first things first, here at Nashman Coles, we have done some extensive research into Amazon, right? We actually prepared a piece of research regarding their earnings. Their earnings is out on the 2nd of February, which is tomorrow. So in this article, this is what we have said. Amazon has had a tremendous run since the March lows, nearly doubling in 2020 and returning 102% since March. But can this growth be replicated, and is it still possible to capitalize on its growth? And how will their next earnings report perform? The effect of COVID on e-commerce has been enormously beneficial. With shops closed and mobility impaired, the only options consumers are left with is shopping online. This has also benefited other ones like Shopify, ASOS, there's a whole host of different ones. The most prominent barrier of entry was consumer education. Suddenly the consumer barrier of entry is a lot easier to penetrate as the consumer became motivated and forced to change their habits. We had to change our life completely. For example, if you look at the stock of Fiverr, it was so cheap before, and suddenly Fiverr has blown up because our lives have changed so much. There have been winners and losers, and Amazon's clearly been a winner. Okay, so according to 44 analysts, they predict that Amazon will reach $3,800 in 2021, which is obviously this current year. Our earnings forecast, EPS 7.14. Okay, I can go into the numbers, but basically, the analysts are predicting that Amazon's going to do very well, but we are predicting that Amazon's going to do better than what the analysts are predicting. This is important because the market prices things on what the analysts are predicting. Yeah, it's part of the equation. So if the analysts are wrong and it does better, then there's a high chance that Amazon will pump in price. Yeah, because it has to make up for what the market didn't think. Does that make sense? Right. So anyway, this is significantly higher. So this is what we're saying. We are expecting an EPS of 8.23. Yeah, revenues of 124 billion. So the analysts are saying 7.14, and we are predicting through our equations 8.23, which is quite a significant jump. Yep. And the reason for this is significantly higher than Wall Street's predictions. The projections below are purely mathematical. So what he's saying here is Amazon's revenues continue to increase with the stricter lockdown measures. We all knew that. So what happened earlier in the year, I believe it was around August, September time, there was a surprise. It was a negative surprise. And Amazon decreased in price by more than 5% because suddenly the revenue was up, but the EPS was down. And the reason why the EPS was down, the earnings per share, is because Amazon had to spend more money to deal with COVID, to protect its staff and change its supply chain management. What we are saying here in this piece of research is those are fixed costs. Some of them are variable costs. But when you spend the money for some of these things, you don't need to spend it again. Yeah? So we are expecting the EPS to do much better than what Wall Street is predicting for those reasons. Okay, so if we also go into it, in this article we are saying while Netflix earnings just about met expectations, and they did not increase in revenue, they did cross the 200 million subscribers mark. So with Netflix, what the big surprise was the subscriber numbers, yeah, the memberships. And after there was the Netflix earnings report, I believe the stock increased by 15% or so. Again, because the market had to correct what it was expecting. In reality, there were two different things. So for the full year, they added 37 million paid members, and they achieved 25 billion in annual revenue. And we can also anticipate a similar increase in users on Amazon Prime. Okay, because Amazon Prime has its thing, Netflix has its thing, both kind of similar business model. So what we're saying here as part of the Amazon business to do with Amazon Prime is going to do really well. And we're basing that on the evidence of what Netflix has done. So regarding Microsoft, looking at Microsoft's earnings is perhaps the most valuable piece of information in this article. AWS, Amazon's cloud services, constitutes its most profitable business source of revenue. And their biggest rival is that sector, Microsoft. While Microsoft's growth is bad news for Amazon as they capture a larger market portion, in the short term, it can give us an idea on the demand growth for cloud services. AWS constituted a staggering 62% of its operating income in 2019. Microsoft's revenue in intelligent cloud was $13 billion and increased 20%. Server products and cloud services revenue increased 22%. Thus, unless Amazon is losing market share to Microsoft, we can project a similar increase in revenues from its highest yielding revenue source. So the short of that is Microsoft has done very well with its cloud services, so we expect AWS, which is one of the most profitable parts of Amazon, to also do very well. And regarding Netflix, that they've got their entertainment side, Amazon's got its entertainment side, we also expect the subscriber numbers to be up. So it appears that Amazon is firing on all cylinders. And we're using that with the past evidence of Microsoft smashing earnings, Netflix smashing earnings, and Microsoft went up 5% after the earnings and Netflix went up 15%. So it's not that far-fetched to say that Amazon could also do quite a big move. Yeah. So while we are projecting returns of EPS 8.23 and revenues of 124 billion, which is significantly higher than what the analyst predictions are, we base this data on maths and also the fundamentals of Microsoft and Netflix. So that's the article right there. This is a piece of research. I think it's a very good piece of research. Okay, so that was the fundamental side. Now, when you're thinking about buying something, we spend a lot of time researching the fundamentals and the technicals. So now I'm going to take you to the technicals. Okay, this pattern here, you can call this a pennant. Pennants are continuation patterns, which means that the higher probability is to continue the way that it was going before it made the pattern, right? So in this case, we have a bullish market for Amazon. This is a pennant. The reason why I think it's a pennant is because you can see since June up to now, which is obviously many, many months, it's been consolidating, it's been trading sideways. And it's a bit like a spring. You bring the tension there and then boom, there's an explosion in either way. But as I said, the higher probability is to the upside, and using the fundamentals that I just discussed with you guys there, I think this is going to break up. And actually, how I've drawn it, it looks like we already broke out. So if you want to do a breakout trade on Amazon, I think we can run from here. The Wall Street analysts, they're predicting around 3,700, 3,800 as a take profit for Amazon. I think this is where you can take your first take profit of, say, 70% of your position out, and then you leave the last 30% for this bigger wave up to possibly 4,000, let's call it 4,500 on Amazon. It seems like a crazy price target, but that is possible. Why is that possible to go all the way to 4,500? Well, we can talk about the fundamentals, which is what we already mentioned regarding Amazon. But from technical analysis, this type of pattern, they say that for take profit, you should repeat the leg you've done previously to make the pennant, and then you copy and clone it. So that could take us to 4,500. So personally, this is what I'm doing with this trade. Actually, our members in our Discord group, they entered this trade many days ago. So they've already made a good 10% or so. We entered around here. So they're already 10% up. But if you haven't entered this trade already, then yeah, I think we can go all the way up here. My only caveat of that, where I would change my opinion, is if Amazon for some reason did terrible in their earnings, and then we broke the support around this region. You know, if we dipped below 2,960, I would say this pattern is invalid, and we have to rethink everything. But for the moment, based on technical analysis and the fundamentals of what we know, this looks the highest probability of going all the way up here. Now, why is Amazon so important? This is the Nasdaq. How the companies in the Nasdaq are arranged in that index is so important. if you want to do a trade on the Nasdaq, you need to understand what companies are in the Nasdaq and what are those companies doing and where are they going. So look at this. Amazon is in the top 3 of the Nasdaq. You've also got Tesla, Facebook, Google, Microsoft, Apple. Microsoft has had excellent earnings. They are, in my opinion, just going to keep going up. Apple also had good earnings, but people were like, oh yeah, it's a bit expensive. But I personally think Apple can run and go for 170. That's my opinion. Okay, Microsoft can also run. Amazon, I think, can do a big run. Tesla, well, Tesla, in my opinion, is overvalued, but you keep having people buying it. So as long as people think there's value there, they will keep buying it. So the point is, these companies in the Nasdaq, they sway the index. And I think Amazon is also going to sway the index. We had a bit of a fake out in the technicals here, and then we've done a big move up. As you can see, we're trading in a bit of a channel all the way since, all the way since October time. So I think, based on what's going to happen with Amazon, the Nasdaq can also make new highs, and we can probably hit 14k in March time. That would be my target. The mean, yeah, I think we're going to hit 14,000 on the Nasdaq in March. This is all correlated with Amazon and FANG. So there you go. I hope you have found that quite educational and informative. Yeah, that's useful. So I would also like to inform you that myself and Khalil and Shireen, we are on eToro. So if you don't use eToro, you can click the link below and sign up. Yeah, that will be your way of thanking us. If you are already on eToro, then you can copy us or just look at our trades. It's entirely up to you. So this is my profile on eToro. You can see what I'm invested in. I'm already in Amazon. I've already got some nice profit on that. I entered another position today. But yeah, one of my earlier positions there. Oh. What's going on there? Yeah, so you can see what I'm invested in. And I've made good profit last month, and this month I'm already up nearly 4%. So if we go to Mo's profile, here's Khalil, he's our other analyst. He's got very good stats. Look at this, 11% for January. Last year he made a whopping 166 for profit. That's very high profit, yeah. And finally we have Shireen. She's our other analyst. She's the one that posted the article today regarding Amazon. Okay. So you can look at her stats as well. She made 83% last year, very nice, and 12% for last month, and this month, today she told me she's up just under 3%, so that's very nice results. So those are our results. I would also like to inform you guys that we do have a Discord group. The Discord group is free to join, and we post our trading ideas there and educational content, and we have a nice community. We're having a joke with each other, you know, it's not all serious all the time. I can't be serious all the time, yeah. I'm not a robot, I'm a human, yeah. Okay, so I just want to show you we have a lot of trade ideas here, yeah. So for example, we posted regarding Equinix, which is another company we think that will do well. We posted about Amazon a long time ago. Actually, we posted about it in, very, very early in the year, but we made a point that it was good to buy recently to increase your position. So if you would like to join the Discord group, then I think it's good because you can get these trade ideas early, because it takes time to obviously make these videos and post them. Yeah. And if you want to copy us on eToro or join eToro, then feel free to do so. And if you've got any other questions, any comments, you just write them down below and I will appreciate it. And well, thank you for watching. Okay, so take care and bye-bye.